Welcome back to the channel, everyone. Today I want to talk about exactly how to get your money out after the MOAS, especially if your broker goes bankrupt. And right here there's a lot of excerpts directly from the SIPC website of how exactly a liquidation works and what the time frame is. I also want to dispel a bit of FUD about Marco Metzler as well. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, what to expect if your broker goes bankrupt. So the poster decided to ask TD Ameritrade and Fidelity what would happen to our shares in the event they go bankrupt, because it's likely during the MOAS that some of the brokers will go bankrupt from liquidity issues and failure to meet margin calls and margin requirements. He says I should add that TD Ameritrade and Fidelity are two of the biggest brokers, so they would likely be the last ones to go bankrupt if it did happen, and smaller brokers like Robinhood would likely go under first. Both TD Ameritrade and Fidelity had the same answer, and in the event they go bankrupt, the Securities Investor Protection Corporation, or SIPC, takes over and processes the liquidations. The SIPC also appoints a trustee, an external third-party trustee that's usually a lawyer, to be in charge of the liquidation. This is the same thing that also happens with hedge funds and institutions as well if they get liquidated. They don't sell off their own stocks and cover their own shorts. There's somebody that's appointed to do it for them. Now, directly from the SIPC's website, it says under SIPC's oversight, the trustee gets to work right away to restore securities and cash to customers as soon as possible. It says in a failed brokerage firm with accurate records, the trustee and SIPC may arrange to have some or all customer accounts transferred to another brokerage firm. But obviously, the important word here is a failed brokerage firm with accurate records. We need to make sure these brokers are appropriately recording how many shares are owned and therefore how many synthetics are owned as well. And therefore, potentially brokers like Robinhood, who are in bed with the hedgies and the institutions like Citadel, likely aren't recording the true amount of the synthetics involved, but some parties that don't engage in payment for order flow, like Fidelity, are likely to remain completely fair and are recording everything appropriately. They've said a general timeline of the liquidation is as follows. What happens immediately? Well, as soon as the liquidation is started, the trustee and the trustee's staff close the offices of the brokerage firm and work to take control of the brokerage firm's books and records. It says in some cases, when the books and records are in disarray or have been manipulated, finding and organising the books and records can take weeks or even months. And then as soon as possible, under the SIPC's oversight, the trustee gathers the names and addresses of all customers who had an account with the brokerage firm within the previous 12 months. And the trustee also works to get approval from the court for claim forms. Therefore, all individual investors can submit their own individual claims to the courts. Now, once you've then submitted your claim, if it's under $500,000, then you enter into a direct payment procedure where obviously you get paid your money directly. But importantly, it says in a direct payment procedure, securities are valued as of the date that notice was given of the brokerage going bankrupt being published in the newspaper. Now, obviously that date may be very different to the tippy top date of the MOAS, and therefore if a customer disagrees with a determination, the customer has 6 months to ask a court to review the SIPC's determination as explained in the determination letter. I mean, we're currently giving away an iPhone 13 Pro and many other goodies every single day this month until Christmas. On top of that, you also get the typical welcome bonus of 5 free stocks valued up to $17,500 when you sign up to Moomoo using the link in the description below. Those 5 free stocks are valued up to $3,500 each. You get your first free stock just for signing up with Moomoo and opening your account. You get your second free stock when you make your first deposit of any amount, even if it's only a single dollar. And you get the final 3 remaining free shares when you deposit $2,000. And also be sure to deposit at least $100 and check back every single day in your messages section on Moomoo to see if you've won that iPhone 13 Pro. Moomoo is also a brilliant investing platform. They've got free real-time level 2 market data, they've got advanced charting tools, they've got 24/7 real-time financial news so that you don't miss any important headlines, and they've also got a global investment community so that you can get some new stock ideas. Now, something that I think is going to be important and could provide valuable in this process to help it all go smoothly is if people like you and I take regular screenshots of our brokerage account to prove how many shares we're holding. As Edward says, everyone needs to download or screenshot their positions in brokerages. He says, don't be irresponsible. Please know your brokerage, who's covering them, and what the limit of your coverage actually is. Obviously, if the SIPC and the trustee are appointed to help wind down a firm, but they can't collect some of that information and positions that are held because the records aren't that good, if we have the screenshots to back up exactly how many shares we're holding at the time they went under, well, it just makes their job a whole lot easier. Instead of them having to spend weeks and months getting the books in line and finding out which customer owned which shares and how many shares they owned, we can just provide them with screenshots of our accounts. So you've really got two different outcomes here. If the books and records are all in line, the accounts get transferred to a different firm. This is what happened when Bear Stearns went under, and within a week, all accounts were returned. But obviously, if the books and records aren't very accurate and there's missing assets, it's obviously going to take much longer as you have to submit a claim. But obviously, to support that claim, if you have the screenshots to back it up, well, there isn't really much to argue about. Now, obviously, NSCC 2021-010 could likely help speed up this process as well if a broker went bankrupt, because they could use the NSCC clearing service to borrow cash from another member if they use their assets as collateral. And therefore, straight away, they will have that cash to pay out either through the SIPC insurance or just to pay out to the individual account holders while the broker is in the process of being liquidated and going bankrupt. And obviously, if you've already DRS'd your shares, then you don't have to worry about the broker going bankrupt, as the shares are registered in your name, not in the company's name, or not in the broker's name, or not effectively in the street name. I think the most helpful part of this for me has been alerting myself to take screenshots of my investing account. I'm going to continue to take screenshots during the squeeze, just so I have the most accurate and most up-to-date record if my broker does go under. Now, I also wanted to dispel a bit of FUD around Marco Metzler. Some people, for some reason, don't really think he exists or seem to think he's a fraud. Now, I wanted to let you all know that Dr. Marco Metzler definitely does exist, and he's going to be doing an interview with Boss Blunts on his YouTube channel, which will be posted on Christmas Eve between 7 to 8 PM Central Time. On top of that, to really dispel the FUD, if we use the Wayback Machine on the F&P Capital website and go all the way back to September 2011, we can see right here Dr. Marco Metzler. Now, obviously, he looks a tad different from his Twitter photo, maybe a little bit younger, but obviously that's because this is from 10 years ago, back in 2011. But the interesting thing is Dr. Marco Metzler's track record. Between 2007 to 2011, he worked for FMPC Consulting. Prior to that, he was a CFO, and prior to that, he was a director at Fitch Ratings in London. And previously to that, he also worked at Deutsche Bank and UBS as well, and therefore Dr. Marco Metzler definitely does exist, and he's definitely not a shill and has a brilliant track record in finance. I think some of you have been watching Charlie's vids and seem to think that Dr. Marco Metzler is fake. I obviously don't really like attacking people on YouTube, and I tend to stay very neutral and unconfrontational, but I did want to clarify this one thing because I think that Dr. Marco Metzler is a very good source of information. And I also think that's why Trey made his recent video saying that everyone on YouTube is here for different reasons. Some people provide technical analysis, some people provide the fundamentals, some people provide the enjoyment, some people provide all of the information and the sources, and some people have maybe more underground information. Everyone provides their own little different thing, and that's why everyone is useful. But that's why you should almost listen to everyone and not just solely rely on one person and solely rely on everything that one person says. For example, I've been wrong in the past and I've admitted it. Trey's been wrong in the past and he's admitted it, and I'm sure pretty much everyone here on YouTube has been wrong at some point and has admitted it and then continued on. But enough of that, I also wanted to talk about AMC's retail investor ownership and also, interestingly, compare it to Cinemark's retail investor ownership as well. Obviously, we know that on CNBC, Adam Aron said that retail ownership of AMC was 90% when you exclude the insider shareholdings. He cannot lie about that. He and his lawyers know that, and doing so would bring lawsuits and investigations, and therefore the 90% retail mark must be true. And then obviously when you add that 90% to the 33% institutional shareholdings, you get around 123%. Obviously, we also have short interest of around 20%, so you take the 100% available float and add on the additional 20% shorted shares that have effectively been taken from somebody that owns shares and sold to somebody else. But interestingly, if we look at Cinemark, we can see that Cinemark has 111% institutional holdings all on its own. AMC only has 33% institutional holdings, whereas Cinemark has 112%. Therefore, the retail ownership of Cinemark is very, very low in comparison to AMC, and that's why AMC retail investors own the flow. And I also wanted to recap on something Peter Hand said as well. He said, I know there's a lot of people wondering if this squeeze play is for real. Is he dumb or are we dumb for not selling at $60? And when are the hedgies going to cover? Peter says, yes, sometimes even I have my doubts, but if we were so delusional, why did the Wall Street Journal do a very biased article and try and gaslight us and get us to sell? Obviously, the Wall Street Journal recently posted an article basically saying that synthetic shares were impossible and simply didn't exist, and somehow that was confirmed by the DTCC. Which obviously we very quickly debunked because even the DTCC maintain a list of failed to delivers, which quite literally are synthetic shares that haven't yet been closed out. Peter said this is comical and their FUD actually serves as validation for the play. They would have been better off writing a more balanced story or simply not to have written one at all. Now this is obviously called the Streisand effect. It's where the action of suppressing something to reduce or remove visibility actually causes the exact opposite to happen. My point with the Streisand effect and FUD is just take a look at the current climate of the meme stocks and the amount of FUD circulating, especially I've noticed in the YouTube comment section. He said guys like Charles Gasparino and crew want everyone to move away from the stock and are saying that there's nothing to see here and that the stock is dead, but in fact this is having the exact opposite effect and is proving our due diligence and proving that AMC will squeeze. Now, something I also found very, very interesting is around the Department of Justice investigation. So the DOJ has a 97% success rate. I think this is brilliant news for us because the Department of Justice are obviously doing their short selling investigation. If they are indeed also investigating Citadel, there's basically a 97% chance that Ken Griffin is going to jail. And as always guys, if you enjoyed this video, be sure to let me know down in the comments below what you think about getting your shares off the MOAS. Are you also going to start taking screenshots of your position just in case we need to prove it to the SIPC? And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.